I'm happy to introduce you Christoph here, who has finally made it. He's a little bit, it was a long day, I guess, a long trip. But I hope and I think and I'm convinced he has something exciting to tell us. So, Christoph,
thank you.
The stage is yours.
Okay. Yeah, thank you very much. My name is Christoph Mussenbrock. I'm from Etherisk, and I beg pardon for being so late. My bus from Munich was very late because of some issues on the highway. And finally, I'm very happy to be here. I feel very honored to be in Zurich. I realize that my frequency of being in Zurich is raising or is increasing in the last year. I have been one time in Zurich in the rest of my life, and now I think 10 times in the last 6 months, which has a reason because Switzerland, of course, and Zurich, Zug, is Crypto Valley, and we have also partners here in the area. I'm very happy to see some guys here, which we are working together, and so this is a great area to work in cryptocurrency. And I would like to show you something about reinventing insurance on the blockchain. But before I start, I would like to say some words to my person. I'm coming from the German cooperative banking sector. And I always say the German cooperative banking sector is one of the first really decentralized organizations, because it consists of 1,000 independent banks which form a network, which are cooperating, which have common companies. And so this structure, which is present for over 150 years in Germany, is really something of a very early decentralized organization, and I'm very convinced of this structure and of these principles and this philosophy. And when I decided to leave this sector, there was only one choice. This is blockchain and this is cryptocurrency, because I find many of the principles which I value very highly, I find again here in the crypto world, and you will see that something is also here in our project, which is the reinvention of insurance. So let's start. Etherisk is a small company, and we have founded in the last year in December, so we are not so long in the area. And I had about 1.5 a year before, when I was entering the space, I was looking for opportunities, and I had a friend which is working in the insurance sector, and he said, you must do something with insurance. Blockchain has to engage in insurance, because insurance is one of the oldest industries, and it hasn't changed for many decades, and it's so old-fashioned and so inefficient, and you must do something, and blockchain maybe is something which helps. So we have this insurance in the Urban Dictionary is a business which involves selling promises which are never fulfilled. Basically, some of you maybe have this experience. I myself had this. You have an insurance contract, and then you have a damage or you have a casualty, and then you go to your insurance company, and then they say, well, you have an insurance contract, but look at page 23 of the terms and conditions, and there you can read, we don't pay in this situation, and I'm very sorry, you have paid for 10 years in this contract, but sorry, we can't pay. So this is a bad principle, and this leads to a very bad user experience, for example, and a very bad relationship between customers and insurance. In Germany, 43% of all people think that household insurance is very easy to defraud. If something happens in your household, then you can just make a photo and send it to your insurance and say, yeah, well, my friend was there and he broke it, and now please pay. And the other side is that the damage caused by insurance fraud is about 4,000 billion. And this is also a sign that there is something which is out of balance in this sector. And there is a conflict of interest. And of course, we don't question that insurance in the current form is very valuable, that is very important, it works. In most cases, most of you have health insurance, and what would you do without a health insurance? So we don't question the principle itself, but we see that there is also some problem, and we think it's worth to think about this problem. And the problem comes from a source, and the source is that in the case of a claim, then the customer and the insurance company are basically enemies, because the insurance company tries not to pay and the customer tries to get paid, and so there is a conflict, and the conflict is in a situation where the customer needs the insurance company most, and there is much regulation and much customer protection to solve this problem. So in Germany we have a big bunch of laws which try to solve this problem, and customers have to be explained and so on. But we think we should try another solution for these misaligned incentives. So the incentive of insurance company and incentive of customer, they are not aligned, and we try to do something else. What is the alternative? Well, the alternative is basically our prototype. I would like to show this live. We have so-called flight delay insurance. So if your flight gets delayed, then you get paid. And last year we had this prototype live at DEF CON 2 in Shanghai. And our slogan was, "You love to be late," because if your flight is delayed, then you get an automated payout, and you don't have to claim for this. You just pay your premium, then you wait, you fly, and in the moment of the landing, the contract calculates if it's delayed, and it pays the premium, pays the payout. And I would like to show this. I select simply a flight from Amsterdam to Stockholm. A certain date, maybe on Thursday, and now I search, and now we are doing a simple Google search for the available flights, and I just select one flight here out of the list, and now I can apply for a policy. And as you see, there is a table, and this flight KL 11009 has a certain distribution of probability of a delay. There is a delay between 15 and 29 minutes, which has a probability of 12.9%, probability of a delay between 13 and 44 minutes of 12.9%, and a probability of a delay which is more than 45 minutes of also 12.9%. This is just by chance that the probabilities are all the same. With a different flight, you would have different probabilities. We take these numbers from a database where all the flights all over the world are collected with their delays over the last 3 months. And so these percentages are just the average delay of this flight number in the last 3 months. And now I just enter the premium, for example, 1 Ether, and I apply for a policy. Well, I don't have so much in my wallet. We use MetaMask. MetaMask is an online wallet for Ethereum. You see it here. And you see my balance is 0.67 Ether. So I can't spend 1 Ether, but I try 0.5. And now the wallet opens, and I can just accept this payment. The wallet pays directly to the contract together with the data, with the flight data. And now I see the transaction hash. This is double. I see the transaction hash, and I can just click on the transaction hash, and now I see the transaction on the Ethereum blockchain. And some of you know this. This is the Etherscan blockchain explorer. It is like a Google for blockchain. You see transactions being mined. It takes some seconds, about 10 to 15 seconds, and then you will see this progress bar will finish, and then you will see the mined transaction. And the transaction itself contains all the data. You see below here is the data, the input data, and after the transaction is mined, we can translate this in a readable code, and you will see this is just the flight number and the departure date, and so we just put the data of the flight into the contract, and from this point on, everything runs autonomous and automatically. Nobody has to do anything, neither the customer nor we as an insurance company. The contract itself is autonomous and does everything by itself.
Where does the data feed for the flight base originate from?
I will show this afterwards. We have a data provider, which is FlightStats. you see now here, this is our Telegram bot. We have connected the contract to a Telegram bot, and so we monitor the whole contract, and you see all the events here at the bot. And I see the Etherscan Explorer is a bit late. I think the policy has been mined already, but we will see. Now it's there, and you see the green check mark. It says the execution of the contract was successful. There has been a second call to a different contract, and this different contract just makes what you asked. He calls our data source in a provable manner, which is FlightStats. FlightStats is a big American company which collects all the flight data. And our so-called Oracle, which is a partner of us, they call this database, they collect the data, they prove this, this query by a cryptographic proof, which is documented on the blockchain again, and then puts the data in our contract. So we have a provable source of information, and this is not cannot be manipulated by any actor in between.
What's the insurance sum? Like when I buy a day or when
Yeah.
I didn't buy, or like when I pay 0.5 Ether, how much in like insurance sum do I get back? Because usually that's an insurance I pay a premium and I get a policy.
I forgot to point on this. We will see this here in the screenshot. Now you see it's at the slide again. Now here you see the payout. Yeah, the payout is calculated based on the probability. The lower the probability, the higher the payout. But this is calculated in real time based on the actual probabilities of this delay. So we have no average payout, but we have a precisely calculated payout based on the probability of this delay.
And do I see that before? Sorry,
So-
I pay 5 Ether and the insurance when I would get covered?
Yeah, this is a different example. We have a probability of 3.23%, and with a premium of 5 Ether, we get a payout of 37.59 Ether. So it's a factor of about 7 or 8. And as I said, this is dependent on the probability. The lower the probability, the higher the payout. And basically, the whole system is calculated as a zero-sum game. So all the premiums cover all the damages or the claims, and we only deduct a very small fee for running the contract, because we have to pay the Oracle, we have to pay also the transaction fees, but this is very small, and in comparison to a classical insurance, this is by a factor of 10 lower costs. A normal insurance has about 30 to 35% cost, and we have cost about 3%.
How do you guarantee that you have enough funds to actually pay out? So there are fluctuations where there might be certain points where you're hit more than average.
Exactly, yeah.
For that, you have to pool somehow the money.
This is statistics. Statistics is law of big numbers, and as you know, statistics is not a guarantee that everything happens like in the history, but there are fluctuations, and there are some periods of time where there are more claims and some periods where there are less claims. So we need a so-called risk pool, a big source of capital or fund, which covers all the claims, even in situations where there are many claims at one time. These are so-called black swan events in the extreme. For example, if there is some volcano in Iceland and all the flights all over the world or in Europe are cancelled, then all these claims would be made on one day, and so the risk pool would be drained. But we calculate our risk pool in a way that we always can cover all claims. So we have always enough money in the risk pool that we can cover all claims. And on the long term, this will average out. But maybe it takes 3 or 4 years to average out. If you have one black swan event, of course, it takes some time. This is the same in a big insurance. If there are catastrophic events, then it takes some time until the risk pools are filled up again.
Basically, if you set up your business initially, you need to fill up the risk pool.
Yes.
and this is the initial investment that you need to take in order to operate.
Exactly. Yeah, we had this last year, and we put last year we put 5,000 Ether in this contract. It was private money from me and some friends of me, and so we were lucky. All of the claims and the premiums were just in a balance, and we did not make a big profit, but also we did not lose any money. So this showed that in principle it's working, and we were lucky that we didn't have a black swan event.
Can you take the money out of this risk pool, you as a person which it belongs to, or there's no chance?
Yeah, we have this the important question, because blockchain is, as you know, is always about decentralization and immutability, and so basically in the pure form, like last year in the DAO, there was no possibility of external people to intervene in a contract. Yeah. But it has shown, the DAO event has shown that a contract which has no emergency exit is very dangerous. Yeah? If there is a fault, then you have no access to the money. And we have seen a similar example in the last weeks. There has been a certain contract of a decentralized exchange, which was a bit bad designed, and there were $14 million in this contract, and the designers, they did not have access to the money, and the money is in the contract and they can't move it again. So we have an emergency exit, so we can push a button and then we can access the money in the risk fund in case there is something happening. But this is not a single person, but we have so-called multi-sig. So 4 of 3 people have to work together to get the funds out of the contract, and these persons are independent trustees which ensure that there is no chance for us as designers to go away with the money.
But if let's assume 100 people go to this flight, they all buy this policy, and so I would have understood that when I do this insurance, I pay whatever, and then I get, depending on the probability that the sum that this is with the contract, that the policy sum is in the wallet of the contract.
Exactly.
So that's so basically there is, from a regulatory point of view, there is no risk for the consumer that it's not paid out.
Exactly.
However, when I assume here, like I could go, like this product really becomes very familiar. So all the people going to a certain flight, they buy all these policy sum, and then they drive the pilot. And so
Okay. This is. There are many. In fact. In fact, we thought a lot about this possible attack vectors. Yeah, not attack vectors on the technical side via programming or hacking, but attack vectors via game theory. Yeah, via, for example, gaming the contract by offering the pilot some and say, here, make another round around the airport, or you can even phone the airport and say there is a bomb in the terminal and you have to evacuate everything. So basically we were a bit frightened if we incentivize people to do such malicious things. But basically this is the same today. Yeah? If you want to, you can blackmail people and you can do anything. This is nothing new in this space. And we had some security measures in our contract. For example, we had maximum sum of payout per flight. So if there had been 10 people on the same flight, we would decline all following policies because too much risk on one flight. And we had other security measures in the contract built in. We have, for example, a time lock that you can't apply for a policy 1 hour before the flight, because you see the flight is delayed, then you make your policy, get your payout. This is not possible. You have to apply at least 24 hours before the flight. And the next step would be to include weather data, to include news data, for example, strikes at some airport, which is very common in Germany. But there you have usually you have news sources, and basically, if there are enough policies in the pool, then also these events average out. So there is no danger for us to lose money. But of course, this is an issue. We have to think about it, and we try to build in some security measures in this contract.
What is the maximum?
Do you need to be on the flight in order to take out insurance?
Yeah, this is another important aspect. In this form, basically, people say, yeah, this is gambling. Yeah, everybody can bet, and this is not an insurance. This is gambling. Of course, you're right. This is gambling. But we have already a version which checks for ticket data. Yeah, you know, in Europe there is a big common database, Amadeus. And all the travel agencies and all the airlines are putting their ticket data in this database, and you can access the database via an API. And you can put the 6-digit flight code or booking code and your last name, and then you can see if there is a ticket. But we don't have access to this data, to the real data, because this is personal data, and so without a direct contract, we don't have access to this data, but we would do this in a productive version. Basically, we know Swiss insurance, which has a similar product and which has a similar problem. They have to check for ticket. How do they do this? They just have a checkbox. I have a ticket. Okay, I make this checkbox and then I can apply for policy. Very easy. We will do this another way, but just to show other people have the same problem, they solve it very simple, and we will check for ticket data in a productive version.
What's the maximum premium?
Maximum premium, in last year we had the maximum premium of 5 Ether, which would be nearly 1,500 Swiss francs today, which would be much too high. So basically we would limit it to about 20 Swiss francs in Ether. Yeah. Because then you had a maximum payout of about 200 or 300 Swiss francs. And I think this is a good balance between...
But I can submit 10 requests, 100 requests, right, onto the same flight.
I did understand the question.
I can submit 10 policy requests with 5 Ether to augment my premium.
Yeah, if you check for ticket data, then this is impossible, because you would see you have already applied for a policy and you would decline the second one. So we would only accept different tickets for a flight. Yeah.
When you say then 10 tickets, it means that if I book an insurance for that, and then my friend book also, so
yeah.
the people number 10 will not
yeah.
have access to...
yeah, we don't limit the number, but we limit the risk. But we count the risk and we accumulate the risk, and we check at each application, we check how is the accumulated risk on this flight. Okay. And if this accumulated risk of this flight is higher than a certain upper bound, then we decline the next policy. Yeah.
Can you overlook all the system, how many policies are out and how much money is in the risk box?
Yeah, we have this running on the testnet since last year. We have in between we have 250 policies just on the testnet, and in the mainnet, which we had last year, we had about 100 policies.
But is this real time? You see this moment,
yes.
So much money is out.
Exactly. Yeah, it's always real time.
Are you hedging the value of Ether? Because today it's 350. If I take a flight in 6 months, take a policy, and Ether is 2,000, it's breaking your business, no?
Yeah, of course we have to take into account that the value of Ether is very volatile, and so in this example, maybe we can cope with this because the duration of a contract is very short, only a week or maximum 2 weeks. Yeah? But as you know, in 2 weeks, much can happen in the crypto space. And so we are thinking of a so-called fiat bridge. So you don't pay in Ether, but you pay in dollar or in euros or in Swiss francs. And we use the blockchain only not as a medium to store value, but only as a medium to do the booking and do the counting, and so we don't have this problem with the volatility of the currency. But of course, we would love to have a so-called stable coin on the blockchain. Some projects are working on this. Maybe you know Maker. Maker is going to build a stable coin. There are other projects which are also building a stable coin. Stable coin is basically a cryptocurrency on a blockchain which has a so-called market maker mechanism integrated, so the exchange rate to a mixture of fiat currencies is always guaranteed to be in a very small range, and this would be ideal for us because we need a stable currency here, but we need a stable currency on the blockchain ideally. And Ether and Bitcoin is not stable for our purposes. For demo it's okay, but not for real business. Yeah.
From an investor's perspective, I understood that you have in the pool you have Ether in the amount of the maximum claims you need to face. So with let's say fiat insurances, no insurance needs capital to the same extent it's might be liable for claims. Yeah. Every insurance has less capital and might need to pay claims. Yeah. So why would an investor invest in your solution where he needs to invest more capital than you would need to invest in another insurance where he needs to invest less to provide insurance for the same risk?
Yeah, this is right. We have decided to, for our pilot project, to cover all the claims. This is just to be safe, and to have a safe project and a safe pilot. In a real life or in an extended version of our model, we of course would have reinsurance. So we don't need to provide all the capital for all the claims, which can be come at a certain point. But we have a reinsurance, and the reinsurance covers the long tail risk. And we even are building a model where we can build this reinsurance system on the blockchain again. So we can build a risk pool, and then we can build a different pool which covers the risk from other risk pools, and you can do all this very nicely on blockchain. We have a first concept for this in our white paper, which we published last year, but this is still a work in progress. We think that we have the possibility with blockchain to make this whole area of reinsurance and risk pool much more fine granular and more tradable. Currently it's very difficult to have access to securities which represent insurance risk. There is an instrument which is called insurance-linked security, but there are very high limits and the volumes are big, and this is only a tool for big reinsurance companies. And we think, well, basically it would be nice to have the possibility for everybody to invest in insurance products, because insurance products have nice features and nice properties, and this is not possible because of regulations and because of the cost of the processing of such contracts, and blockchain enables us to offer this at a very cheap price. And we are working on a model where we can make risks, insurance risk tradable. But we think this is not on our roadmaps. This is not in 2018 and not in 2019, but maybe in 3 or 5 years, because the regulatory walls are very high, and we are first building the insurance itself, and then the trading of insurance risk is the next step after that. And for this time, we are working together with classical reinsurance companies which provide coverage for our contracts. And the 100% coverage is just for our pilot.
It's a different question, but with the delay, you say, where do you look at it, measure it? Is it when the airplane is landing, or when you go to the terminal, or because it's probably
the event is opening of the doors. Yeah, if the plane is at the gate and the doors open, and then this is the time which we measure. And this is provided by FlightStats, our data provider, so we get exactly this time. Yeah.
But your product or your vision is more what basically the ILS, this insurance thing, because it's parameterization of the trigger event. So you have an external source of a trigger event which cannot be bribed, which is like a storm or weather. So it's also this ILS is only for weather, for natural catastrophes. Where it's very evident for everything. Here you have to fly, where you get the data also from an independent source. Because I think not all insurance products would be suitable for that. Because liability policies is impossible where you have a quarter beside a real line or more. So it's, you need to have also the household policy doesn't work as that.
So what is our approach? Basically, you are completely right. What we are building here is so-called parametric insurance, data-driven insurance. So all data is objective, or basically objective, and cannot be bribed. But this is only a share of 2% of the whole insurance market. This is enough for us. Yeah, we would survive with 2%. Still, there are very interesting products. For example, household. So, what is the approach? Lemonade. Lemonade is doing this via AI. They have a bot, and the bot puts questions in the case of a claim, and there's a process of 5 minutes, and the customer is asked some question, and the bot is trained to discover if the claim is justified. And this is pure AI, and so we have tools which can transform soft data like the chat between the customer and the insurance, transform the soft data into mostly objective data. And Lemonade, for example, they claim that they can cover 80% of their claims automatically, and 20% they have manual agents which just decide via going to the house and looking what has happened. And so this is still manual. And of course we can use similar tools, and this is well known, the space, but this is not the first which we are trying to do because it's complex. It adds AI to the process. We are working on this also for the calculation of risk. For example, if you take weather data into account, then you need AI because the connection between flight delay and weather data is not linear. So you can't use analytic mathematical tools. You need AI to get the data out of it. So we will do this, but in the first step we concentrate on parametric insurance, data-driven insurance. And maybe I just go on with because I have still a lot to show. Now, the same model, the same contract, nearly 98% of the same code is used for covering a completely different vertical, crop insurance. So basically, after we did a flight delay, there came a guy from Africa and he said, hey, I'm building crop insurance, but all the insurance companies say it's not efficient, the premiums are too small, and we can't build a product which is economically feasible. And he came to us and said, maybe you can do something. And we built this prototype in 2 weeks, and we just exchanged the Oracle with the data source from FlightStats with a better data insurance. And of course, we changed the parameters. Here you can select the crop and the seed grade, the quality of the crop, and the size of the field and the location of the field. You can just pick it out of the map, and then you can insure against flood or drought. There are only 2 events, flood or drought, too much water or too little water, and the same process. The contract watches at a certain point of time is the sum of all the rain above a certain limit, and then it gets a payout. And so very simple and interesting was that we could reuse 98% of our code. We just exchanged the Oracle and we just exchanged the parameters of the insurance. And that took us to another idea. But this is the, I think you know this is the architecture. We have our web app, and the core is the smart contract in the middle. And we are using our partners from EtheriscBlockchainers, which are connecting our contract with the data provider. And EtheriscBlockchainers is a small blockchain company which is specialized on building this connection between the data source and the smart contracts.
What happens in case of an incident, for example, when the data provider does not deliver for whatever reason the data is needed to trigger the contract?
We have an error condition, and then the contract puts the police in a certain status which is called manual payout. Manual payout. So we get a message, an event happens, and we see there is a policy where something technically went wrong, and then we just look at the data and we make a manual payout for this customer.
You have to get in touch with the customer beforehand, or?
No, we don't touch the contract, we just make a manual, just a transfer of money. So the customer has to, of course, trust that we do this for him, because the contract is not able to cover all these different situations. Of course, you could make a very complicated contract which would also cover these situations. For example, if the plane is still in the air at the scheduled landing time, then we reschedule a call to EtheriscBlockchainers, and we do this 3 or 4 times. But after 3 hours, we just have to stop, because then something has gone wrong, and then we have to look at the data. Is there an accident, or has something happened? And so this is one of the few situations where we have to manually interfere and we have to manually pay out the money.
How often does this happen from your experience so far?
It happened 1 time in the last year.
Oh, wow.
So this is very rare. And Flightstar, as to say, is a very good provider. They have a very high quality of data. And so there are a few events. And so this is a very extreme edge case. Okay, now to our vision. We saw flight delay, we saw crop insurance, and then we are thinking, well, there is so much in common, and let's build not only one insurance product, but let's build a whole platform. And the platform is, in our vision, is a so-called protocol. A protocol consists of certain templates, certain rules, and certain standards which enable participants on the blockchain to cooperate on insurance products. And we have here the whole value chain of an insurance, and basically our goal is to make insurance as easy to use as an import of a library. Yeah? Just import insurance, and then you can use insurance product in your application and in your project, and it should be so simple as just importing a software library. And this is our goal. This is not trivial, but we try to do so. And of course we try also not to cover the front end, which is the relation between customer and insurance company, but also the back end, which is the relation between insurance company and reinsurance. And this was what we described in our white paper, a token model where we can trade insurance risks, and where you can make up a market where similar risks are pooled in a contract. The contract is represented by tokens. The tokens can be traded. You know, all these tokens are very easy on Ethereum to produce, and you can very easily trade them on even on decentralized exchanges. And so you make the whole process of investing in insurance very easy, and you see what is happening now in the space. The crowdfunding of projects has gone to such a stage today. Status, which is also part of us, has had a token sale today. As usual, they were finished after some minutes, and they collected a huge amount of funds, and they now are working on a messenger, and we are very proud that we have a chatbot which is integrated in their messenger, so you can apply for a policy with a chatbot. And so all these companies are working together. There are many synergies, and we are thinking that these companies should build a whole space and a whole platform, and we will build this platform. Our achievements so far, I don't want to, this is a marketing slide, we have some prizes won. And now we would like to emphasize again, what is the difference between our approach and the classical approach? Our approach is that the contract is immutable, cannot be manipulated by the insurance and also not by the customer. So there is no conflict of interest because you have always an objective measure, which is the contract itself. And also the terms and conditions are very small. Basically, our terms and conditions are, if flight starts says the flight is delayed, then you get a payout. Finish. So one line, and this makes insurance very easy, very transparent, and we think this is a big step towards a good customer experience and a good fairness also to customers. And also it reduces the cost because we have a practical no operational cost because we don't have an IT infrastructure of our own. Our IT infrastructure is a public blockchain, so we don't have to pay for millions of high secured IT infrastructure as usual in insurance, and so we have nearly zero marginal costs, and this is also a big step towards customer. We take nearly all of the premiums and pay them back to the customers. Again, what are our challenges? There are many challenges. As you know, insurance is one of the highly regulated areas, which you know. We have legal issues, we have regulatory issues, and we have also, of course, product issues, what are interesting business cases. Let's go through this. We are discussing what is the legal personality of a smart contract. And you could think of that a smart contract has a legal personality of its own, like a company or a person, which are basically the two legal personalities which we know, but there could be a third, a smart contract, which could have the same properties like a legal personality. We think this will happen someday, but for sure not next year and not the year after next year. But we think this would be a very interesting approach. If you would have a smart contract which would act as an entity of its own. And this would have very interesting consequences, but it's a vision, it's future, it's rocket science now, but as you know, the things change very quickly. For example, Arizona, one of the American states, they have a law that smart contracts are, and the signatures of a smart contract are accepted as valid electronic signatures. So you can use a smart contract in business processes, which is already a big success. But still, a smart contract is owned by somebody, and so it has not a personality of its own.
I attended a FINMA event in May, and asked the same question to FINMA. They answered, as you're right, at the moment, no. If we would do so and accept the smart contract as a legal personality, we would try to link it back to some human individual as it is done with corporates. You have a CEO, you have Thomas and everything. So they would try to build some legal link between the smart contract and a human individual, at which responsibility ends at the end. So this is how they would try to approach this.
Yeah, I think there's much thinking and much discussion in this space about this topic. And of course, you in the Anglo-Saxon legal space, you have this notion of a corporate wheel, which is some like a bubble around a corporation, and you as an individual are outside of this bubble. So if there is some issue with the company, you are as an individual, you are protected, and even if you are responsible for some event, which is then still the company gets sued and not you as an individual. And so there is a separation. And we think this would be helpful if we would have something similar here. But still, it's far in the future from now, but I think it will come. It will come in the same sense as self-driving cars will come. And some people say, well, the best would be if there were no human drivers at all, because self-driving cars, if there were only self-driving cars, the risk of an accident would be far smaller than if there were still human drivers, because the highest source of errors are humans. And so smart contract could be a similar thing. Okay, regulatory. But what are we doing? Are we in an unregulated space in blockchain? Of course not. We are convinced blockchain is not an unregulated space, because all the laws are also always extending also to blockchain. But we see there is a big potential to change in regulations. The most regulations today are ex post. So things happen, and then your regulator comes and says, you are fine because you did something wrong and you have to pay fine. And of course, in the financial crisis, and there are bailouts, and bailouts were the starting point of Bitcoin. Yeah, and because people were uneasy that states and countries were bailing out banks, which are commercial entities. And we think there is much space for ex-ante regulation. So a smart contract always behaves as it should, if you design it well. And so the regulator could look at a smart contract and could say, okay, this smart contract is certified, and then this would be a big advantage for the regulator, because he knows this contract is safe, and also for the customer, because he knows the regulator has looked at it and has certified it. So we think there will happen something, but also we are very early. We talked, for example, to FINMA. We were the first company which were talking to FINMA on insurance, and they were very surprised, because they said we thought a blockchain bank would come as the first, and now you come as an insurance. And they were very friendly, really. I didn't expect this. They were very friendly, and they say, yeah, but what you're doing is very interesting. Go ahead, and just look at our regulations, and if you fulfill all our obligations, then you can act on a blockchain. We don't care on technology, just do it, but please look at our whole catalog. And so this is above all a question of capital and funding. You need about $10 million to start an insurance company. So this is a big entry barrier, but maybe we can solve this. And the next, what are the products? Well, we don't have. We have no market penetration yet, because cryptocurrency is not an everyday phenomenon. Most people are still unacquainted with Bitcoin. I went to a conference in New York, and I was at the border control, and the custom control asked me, where are you going? And I said, yeah, I'm attending a conference. What kind of conference? Yeah, a Bitcoin conference. Oh, what's Bitcoin? I said, yeah, Bitcoin is a kind of currency. Ah, currency. What country is this country? And so this is not so well known in the everyday life, but I think it will grow. And so we have to, for example, we have to build fiat bridges. We have to build systems which connect the classical currencies with the blockchain space. And there are companies which are helping us in doing so. And on the other side, there are completely new markets which are open to us. For example, microinsurance. Because the operational costs are so low, we open the whole space of microinsurance for blockchain products, and this is very interesting, and we are very interested on working on this. Okay. The worthwhile goal, yes. What is our roadmap? We will, basically the whole roadmap is moving in, the future is coming towards us, and we are expecting that we maybe deliver the first product already in this year. We have talked to many regulators. We have already talked to some companies which are interesting to help us to bring the first blockchain products on Ethereum. We are a member of the Enterprise Ethereum Alliance, and we are starting the insurance working group there. And so maybe we can start with the first real products in this year. We are very ambitious. We want to offer the first products before DEFCON 3, which is the big Ethereum developer conference in November, and we try to offer the first products till then. Next year we are going to acquire a license. We are convinced that we need our own insurance company which is licensed, which is run by ourselves, because then we would be able to create products which are customized for blockchain, and we don't have to ask partner insurances, and we can design everything ourselves. But this comes at a cost. We need much capital, and we are trying to raise this capital in the autumn. We are doing a token sale also in the autumn, but we will prepare it very well. We don't want to be part of the hype, but we want to be a very solid project, and so we don't have decided if we make a public sale or only a very limited private sale for maybe interested people or people which are cooperating with us. So stay tuned. If you're interested, we will publish this. We have a GitHub channel where you can watch all our progress, and we will inform you what we are doing and what we are planning. Then as a last step, we are building this platform, and platform means that I will dive into this some slides later. But first some words to the token model. Basically, we analyzed insurance. We were thinking, what is the right design for our token? Is there one token? Are there several tokens? And basically we came up with an analysis of insurance. Insurance basically, from our perspective, consists of three parts. The first part is just the distribution of the so-called expected value. If you have 100,000 policies of a certain similar risk, then you have an average probability of a risk, and all the claims will average out, and so you could form a pool, people paying a premium, and the claims are paid from the pool, and after 1 year all the claims take up all the premiums. So zero-sum game, you can't make any profit, but then you still have these long tail risk. Yeah? You need a bigger risk pool to cover the long tail risk, and therefore you need capital. The capital comes at a cost. You have to pay interest rate for this capital and also a risk premium for this risk capital. And this is the second line here. You have to distribute these costs for the long tail risk. And this is what we are trying to do with our risk pool token. We want to make this tradable. And then the last point, we have to distribute the coordination costs. Insurance works by pooling similar risk, and pooling similar risk is a task which is not trivial. To sell 100,000 policies for a household insurance is very difficult. So this is a coordination effort, and you need managers, you need experts, you need all these people, you need marketing guys, you need risk management experts, you need know your customer people, you need payment providers, all these stuff, and all these costs which are produced there, these are coordination costs. And so we are going to have two types of tokens. We have risk pool tokens, which is not only one kind, but maybe many of them. For each risk pool, a separate token, but they are all similar. And then we have a so-called platform token. The platform token is only one, and the platform token basically represents the platform and the work which is done there. And the risk pool token, the price is determined very mathematically, only with three parameters. The first parameter is the risk profile. For example, flight delay, very easy. Household insurance, maybe a more complicated risk profile. Then you have the duration, how long is this contract running? And the last thing is capital markets. If you need money to cover the long tail risk, then you have to pay risk-free interest rate as a base premium, and this is the which you get from the capital markets, basically. So, but it's very mathematically, and basically a risk pool token is some sort of a financial derivative. And not very interesting from a mathematical point, but not so much from an entrepreneurial point of view. But the platform token, this the price is determined by the efficiency of the participants, if they are working together very well. If the platform is utilized very much, if there are much traffic on the platform, and if there is competition on the platform, then the price of this token will rise. And so this is an entrepreneurial risk, and this is a more interesting token from our perspective. And this is the first one which will be built, and we will build this token, we will sell this token in the autumn. And so what is the function of this token? In a classical setting, you have an insurance company, and the insurance company bundles all the processes around an insurance product. So they, of course, they have a big leverage because they have they pool all these aspects. They have good organization, and they have all in this company structure. And of course, we have a reinsurance, which is a different type of company. But we think we can do better if we break up this chain, this value chain, and we put this on the platform. Then we can have many more participants. Participants can work together, and this is what we know as decomposition of the value chain, and which brings much more internal competition in the value chain, and so automatically more efficiency. Because in a classical insurance company, the different departments of the company don't have to work together very efficiently. Only if the bosses are saying so, but only via command. And we think a market-based solution would be better, where you have many participants and they can work together in a very flexible way. But still, you have to bind them together. For products, you have to have a certain liability and a certain sustainability, and this is where the token comes into play. The token is used as a glue to glue these participants together, because every participant has to put in a certain amount of collateral to take part in such a process. And if he puts this in this collateral, then he can participate in such projects and such products, and then he is always also part of the revenue stream. The revenue stream, of course, comes in. The premium contains some part of a fee for all the services, and this fee is distributed among the participants, and the token is always also a medium to distribute these fees among the participants. So basically we say decentralized platform can replace a monolithic company and make it more flexible, can make it more efficient, and so we get in a completely new space. And we think this is very maybe advanced, but still we see already other projects which are thinking in a similar way. And so this platform will be a platform on its own, but it will also combine with other platforms and other participants which are working on other platforms. So this is our vision. And now we come to the how to start such a platform. A platform does not fall from the sky and then it's running, but we need to ramp it up. And to ramp it up, we have an idea. We want to make a token sale, and the token sale shall basically provide the funds to make this all running. And we will start with the foundation. The foundation will receive all the money from this token sale and will spend the money for the development of the protocol. The protocol itself is open source. The foundation takes all the IP, so all the rights, the intellectual rights, and is kept by the foundation, and so it is open source for eternity. And then the foundation will also incentivize the platform. So the foundation has only one purpose: to foster the adoption of the protocol in the platform. And therefore, maybe, this is still not decided, but it could be that the foundation also funds a company which is acting on the platform and which is a first mover on the platform. So this will be maybe an Etherisk AG, stock company in Germany or in Switzerland, and this AG will act as a classical insurance company. It will acquire a license, and it will use all the services of the platform, which will be provided by other companies, for example, payment providers, travel agencies, oracles, prediction markets, all these services which are available on a blockchain. And Etherisk AG will use all the services and bundle them together to new insurance products. And so we will help to get this platform running and to attract participants and to incentivize participants to build their own products and their own services on this platform. And on the top there are the users of the platform. They also can have tokens and can use these tokens, for example, to buy such products and or to get a certain reward for acquiring more customers in a sense of an affiliate program, whatever. Yeah, a token can have many functions, and the sense of the token is, in the core sense, is to glue together the participants, to provide a mean to secure the platform, and then it can have other functions, for example, affiliate or payment and so on. Well, thank you very much. That's everything I have to tell to you. Thank you very much for your attention, and I'm open to your questions. It was a pleasure for me to be here, and thank you for the questions so far. And now it's an open round, and maybe we can continue asking and answering. Thank you very much.